Hi guys, so in this video we're going to go over this trade that I took yesterday, and I'm going to ignore this trade because this is the London trade that I actually missed out on. So this is a New York session trade. You can see here I got it just at the start of New York session at 7. So let's start on the daily and go through the high time frames. And I also kind of want to talk about how it relates to the market maker sell model, and how using market maker models I was able to identify this trade. On the daily, we can see this is that yesterday's candle right there on Monday, and on the daily we can see there's not much, but this is previous week high, and ultimately it's still bullish, and I want to target that previous week high. But yesterday I was more looking for price to draw into either the daily fair value gap or the daily order block for us to retrace before going up to previous week high. I wasn't like aiming for the daily fair value gap as a draw on liquidity for yesterday, but at least for yesterday I was more bearish than bullish, just because we have some PD arrays that we can potentially retrace into. And looking at the 4 hour, we can also see that there's actually not much on the 4 hour that can push price higher. So there's no like immediate fair value gaps or anything. So that's why as well I was looking for price to draw into this daily fair value gap, because for us to continue higher we need to like retrace, right? So that's why ultimately I was more bearish. Again, on the 4 hour, not much new information. And on the 1 hour, this is where the majority of my narrative comes from. The daily was just like a rough guide. I still can't be 100% bearish. But on the 1 hour, you can see that in London session, we had this inverse fair value gap that was respected and pushed down. So that created this move down, which basically meant that we closed below this right here. So we created a change in the state, and we're basically like fully bearish now for the 1 hour at least. So keep in mind, the trade is here from this vertical line right here. This is the trade. So that's where I got my shorts. So on the 1 hour, my confluences was just this 1 hour order block here, and that's pretty much it from the 1 hour. But there was some arguments talking about how, you know, this bearish fair value gap right here got ran through, and how this bearish fair value gap was actually not respected. Because you can see here, we have this bearish fair value gap created, but this candle actually went up and closed above it before coming down. So why did I still short despite this bearish fair value gap getting disrespected? Because usually I actually like fair value gaps more than order blocks. But for this particular case, it was because I was looking at the 5-minute market maker sell model. But keep that in mind. And now you look to the left, you can also see that this bullish fair value gap also got disrespected here when this bearish candle closed. So what happened was, as price was going down, we disrespected this bullish fair value gap, so it was bearish, right? So then what happened was, we have this, I already marked it out, we have this inverse here, which is our next sort of like bullish line of defense. So after this bullish fair value gap got closed below, we have this bullish inverse fair value gap holding right from this bearish fair value gap. We have it being inversed. So as it retests, it pushes price up and it closes above this fair value gap. So why was I still confident in selling instead of buying, right? Because if you just look from before this line, it kind of does look a little bit bullish. We have this inverse, we have this fair value gap getting closed above. So you can sort of form a bullish narrative here, but you have to remember that when you're looking at H1 PD arrays, what happens is the market maker buy or sell models is on the 5 minutes, which is perfect because it's my entry model, which is where I get my entry from. So this is again 7 a.m. line. On the H1, we had this inverse fair value gap right here pushing price above, and what happened was we actually went above, we closed above this, and we went up and we retraced into this H1 order block here. Okay, remember this H1 order block, this H1 order block here. So price pushed up, went into this H1 order block, and then what happens next is what determines whether I enter for long or short. Because when it pushed into this H1 order block, if it was to continue being bullish, what I would have liked to see is this bullish fair value gap holding, right? Because I would like to see if price is really bullish, I would like it to do this, close above this, go down, go up, and then respect this and then continue to go up, right? But because price didn't do that, what we got was on the 5 minute, after we tapped into the H1 order block, we went down and we had a change in the state of delivery right here. A 5 minute change in the state of delivery, and it's also basically a market structure shift here. So we got a market structure shift, which basically is the start of a 5 minute market maker sell model, because you can see here there's accumulation and then manipulation into the H1 order block, and then we have it selling off. We got our first 5 minute fair value gap here. So this 5 minute bullish fair value gap was still holding when we had this first 5 minute bearish fair value gap here that was respected, but this was not within any kill zone, so I'm not interested in selling here anyways. And what happens next is I want to see this bullish fair value gap getting closed below for me to be bearish, which it did end up closing below. So we ended up closing below that. We ended up closing below this low as well, and then we ended up having this 5 minute fair value gap that we retraced into. It's also basically a unicorn, because I think we have this breaker here. We have a breaker, and then we have a 5 minute bearish fair value gap. We also have an inverse fair value gap that price tapped into. So it doesn't really matter what your entry model is, you would have gotten an entry either way. But the main point is that as soon as we close below this low, for me that is already bearish, because it means that the bullish market maker like buy model is not holding anymore. There's no bullish structure anymore, because we just closed below that and we just respected this H1 order block. And it also validates my higher time frame daily narrative, as I told you that I am thinking that price wants to go to that daily order block, a daily fair value gap. Because if price wants to go down into that daily fair value gap, that is also retracement on the higher time frame, right? So if price is retracing on the higher time frame, then it means that price is gearing up for a market maker buy model, because we are slowly going down for us to retrace into this and then create a market maker buy model to reach that previous week high, right? So if price is generating liquidity this whole time, then I also wouldn't expect the cleanest price action, which is why I allowed for that 1 hour fair value gap to get closed above here. And also it was a bank holiday on Monday, so I also wasn't expecting the cleanest price action because of that. But either way, because price showed such a good entry, I decided to take a position here. Basically, another thing to note is that there was an AMD here. You can see accumulation here, and then we can see manipulation into the 5 minute fair value gap, and then you can see distribution after. And then what happens was, you can see that this also happened in that 7 a.m. candle. For me, I was actually on a call, so I was doing something else, and I actually got filled like around here. So my stop loss was actually around here, and then my take profit still remained there. The fill was probably lower. It was like a 1 to 2, something like that. That was my actual trade. I put this because this is the best possible trade that you can have, I guess, for my strategy at least, is selling as soon as we tap into that 5 minute fair value gap after kill zone. So that's it for this video, but I know it's a lot to take in, but this was just something that, like, I wouldn't say it's extremely clear, because there was some sort of understanding that I needed to have in terms of the market maker sell and buy models. So yeah, on the H1 you can very easily see a bullish one if you're not careful, but on the 5 minute it tells you everything, and it proves to me at least the daily narrative that I had on the daily time frame. Yeah, there was a lot of concepts being used in this trade, but yeah, I hope it makes sense, and I'll see you guys in the next video. Bye.